Please. So the following were the expenses on a contract. Following expenses, other expenses given in the problem: material purchased, material at the end. That means closing stock of material. Material at the end 1250. That material is closing stock of material. Direct wages and plant issue, direct expenses. So all the expenses should be entered in contract account on debit side. And what are available stock or income, these items also should be entered into our contract account on credit side. Finally, we have to tally about profit side, whether profit or loss of the contract. Okay, so okay. First expenditure in the problem: material purchased. So we have to two material purchased. Material, material. How much value, ma? Material. Okay, 10,000. Visible? Am I typing, ma? Are you visible the typing?
Yes, sir.
Yes, sir.
Good, good, good. So two material 10,000. That is also expenses. That's why we can enter debit side. Okay. Next expenses. Material at the end. Material at the end means that not expenditure. That means that is not expenses. At the end, that means closing stock of material. Closing stock of material 1250. So that amount should be entered on credit side because of that is closing stock. Stock is available. Stock is available. So we have to enter closing stock. Okay, material at the end. So credit side means you have to put the word buy. Material end. How much value? 10,250 rupees. Okay, two items over. Next one. So material end means closing stock. That means stock is available. So stock is also no expenses. That's why that item is also entered on credit side. Okay. Next, wages. Wages 15,000. So wages amount spent for contractor work 10,000, 15,000. So the 15,000 amount entered on credit side in wages. How much value wages? 15. Second item also entered. Next one, plant issued. Plant issued. So plant issued means that is one of the machine, that is one of the property. So that value is also 5,000 cost wise. Cost wise, the plant issued we have to enter credit side, debit side in contract account. The same value is also entered on credit side. You can say, I can say the time of credit side. And now we can enter plant value, plant issued value 5,000 entered on debit side to plant issued to 5,000. So 5,000. Next one. Direct expenses. That is also expenses. So these expenses also entered on credit side to direct expense. Much value? Okay. All the information, all the expenses entered in contract account, debit side and credit side. Credit side only have 1,250 rupees to material, to wages, to plant issue, to direct expenses. So all the expenses entered contract account debit side. Okay. The contract price was rupees 1,50,000. That means contract price. So contract price. Actually, the contract price given by contract T, contract T, owner. This amount is given to the contractor. So the contract account is prepared by the contractee. Not it's a contractor, not contractee. Contractor. Okay. So contractor 2. So by contract price, contract amount or contract price. Price actually contract price given by contractee. That's why we have to enter by contractee. Okay. So why sir the word is mentioned contractee? Because of contractee has given the contract amount to the contractor. So by contractee, how much value? 1,50,000. Okay. So credit side 1,50,000 means contract price. Okay. Next. Next. It was duly received when the contract was completed on 30th September. Okay, this contract agreement was completed or finished which year? On 30th September 1998. So no need to test that year. Actually, the contract price, the contract agreement amount 1,50,000. That amount is also entered on credit side into contract account. Because of we have to mention by contractee. Because of this amount given by contractee. Okay. Next, charge indirect expenses at 15% or wages. Already direct expenses already entered, return, and one more expenses given in the direct. Indirect expenses amount is not given directly. Direct expenses not given directly, but indirectly the percentage also the percentage given for indirect expenses. So whatever expenses, direct or indirect expenses, all the indirect and direct expenses entered into contract account. Next one, 2. Okay, 2 indirect expenses. Indirect expenses. How much value? Value is not given. A percentage was given. How much? 15% on wages. 15%. Okay. How much value? Wages. Actually, wages amount 15,000 given. So 15,000. Divided by 100. So actually, how much value is available? This value is available. 15% means 2,250 rupees indirect wages value. Okay, 2,000. So all the expenses enter. All the expenses enter in contract account. Okay, all the expenses enter in contract account. It's a increase also. Okay, next sentence is available. Next, continue. And provides rupees 1,000 for depreciation on plant. So already plant value, plant issued value 5,000 given. So 1,000 rupees also included in plant depreciation. So that amount is also reduced or decreased on plant value. Okay. At the same time, by plant by plant. By plant. 4,000. How to write 4,000? Very simple. Actually, plant cost value 5,000. The same plant is also available at the end of contract. The plant is also asset, stock. So cost wise, we have to enter 5,000 rupees amount on debit side. But the same plant is also available, not destroyed. So plant value actually 5,000. Okay, minus 1,000 rupees depreciation. Actually, the plant value at the end of contract, at the end of plant value 4,000 rupees. You have to enter once again credit side in contract account. Okay, the same plant value 5,000 rupees cost, and now the same plant stock, the same plant value 4,000 only. We have to reduce 1,000 rupees for depreciation. Okay, in case you have enter into 1,000 rupees on debit side, so you have to enter this here. You here only 5,000. If you are going to 1,000 rupees enter into debit side, but at the same time you have to enter, you should enter on credit side 5,000. Don't write 4,000. So plant issued value once entered in debit side, the same plant value at the end of contract 4,000 because of 1,000 rupees as depreciation. Okay, so all the details, all the message also entered into contract account, debit side and credit side. Okay, now we have to tally about for both sides. We have to enter for both sides. Okay, both sides have to, which side is higher value, you have to add, you have to count total count for both sides. So which side value is higher, that value will be entered for both sides. Actually, credit side total value is higher. How much value totally? 1,50,000, 1,250 plus 4,000, totally 1,55,250 rupees. Okay. On credit side or debit side, the credit value means income. 1,55,000 total credit value. Debit side 10,000 plus 15,000 plus 5,000 plus 8,000 plus 2,250. So the same time, the same higher value is also entered on debit side because of we have to find out differentiate value. Differentiate value. That differentiate called a profit because of credit side value is more than debit side value. So 1,55,250 minus these total, these expenditure, minus 10,000, 15,000, 5,000, 8,000, 2,020. So differentiate value, how much differentiate value? I think 1,15,000. 1,15,000. Actually, we have to enter. I can enter here. Okay. So in this contract account, profit amount is available. How much profit amount is available? 1,15,000. 1,15,000 profit because of credit side value. Credit is higher than debit side. That's why to profit. To profit. To profit. How much profit? This is 1,15,000. So now is okay. Go back. If you are not understanding, please ask me this. So debit side value, these are debit side value 1,15,000. So 1,15,000 actually total profit and loss account. Profit means profit or loss. So this profit or loss, whatever. Or loss means Understand? Suppose loss means you can write a credit side. Okay, so contract account shows the profit 1,50,000 rupees, 1,15,000 rupees in the profit. Okay. Now assume here profit rupees. This is all. Okay, this is contract account. Contract account is very simple. Contract account is very simple. So actually contract price you can enter contract price only. That's all. Two contract. Two contract. Contract price 1,50,000. Okay. So by bank actually contractee the amount contractee gave the amount or hand over the amount to the contractor, but not directly. So the contractee is giving the amount to the contractor through bank only. Through bank, otherwise they give the check, otherwise the amount they deposit the contractor account to bank only. So that's why we have to mention by bank. Mention here by as 1,50,000. The contract account means owner of the work, owner of the assigned work, owner of the contract. So that's why that means legal person. The person gave or assigned the amount 1,50,000 to the contract work or contractor. That amount given to the contractor through bank only. That's why by bank word is also mentioned here. That's all. Okay, this is contract. Okay. So please look at the note point as the contract is fully complete, entire profit transfer account. So this P&L profit amount is transferred to the P&L account. When they are preparing P&L account, the amount is also fully transferred to P&L account. So this is also contract account, contractee. Contractee means the people who assigns or who give the rights to the people. Okay, contractor means the people who receive or who execute the work. But this account is also prepared by the contractor. Okay, contractor. So in this contract account, profit is available. 1,15,000 profit is available. Actually, the contract agreement amount 1,50,000. Plant value 4,000 is available. 4,000 is available, and the closing stock is available. So these two stock is also added in contract price. So total income of the contract, total revenue of the contract, total assets of the contract 1,55,250. Total expenses 25,000, 30,000, 38,000, 40 is 40,250. So this amount minus or decrease from 1,55,250. The differentiate value is called true profit. 1,50,000. That's all. So this is contract account. Okay. So one more problem is also discussed. It's also will be discussed on next class. Today we have discussed only one problem. That means contract account. So based on this problem, we have to prepare one contract account and contract. Is also available for the problem. Even to I have worked, I have explained in Excel sheet also. Okay.